Hello traders, the title of the video is how to avoid the descending triangle pattern trading errors like a pro. Alright, so generally speaking, when we are talking about a descending triangle, alright, traders will expect a bearish continuation. Alright, so if the price form a descending triangle, alright, so people are selling on the edge of the upper top of the triangle, alright, so people are expecting a bearish continuation. Alright, as you can see here, this stock, people sold it down, so there was a bullish trend, and then people sold it down. Right, after they sold it down, the price started oscillating in that descending triangle. All right, so the mistake that traders are making, a lot of traders will expect that the price will continue to go down, but we can control okay, the risk carefully. So a descending triangle is a bearish triangle. It's normal for traders to expect a bearish continuation. But how do we handle that? That is the question. What I've said to traders is this. Whenever we hear the word a pattern, we must think of what? Location. Where does the pattern form? That's essential. Any pattern, Fibonacci pattern, Eliot pattern, triangle pattern, you want to know where does the pattern form. Very, very important. So for instance, if we see a bearish, okay, a triangle at a bullish zone, alright, at a support level, we need to allow the price to break below that support level and to find a resistance before we can sell. On the other hand, my friend, if we see a bullish pattern at a resistance level, it is crucial for us that we allow the price to confirm that resistance level, to validate that resistance level at a support level. Otherwise, we are just fooling ourselves. So this is exactly what has happened here. This bearish descending triangle is being formed at a support level. That support level is which one here? The 78% Fibonacci retracement level of the prior trend in the zone of $23. Going to color it now into pink. All right. So a bearish descending triangle is being formed at a critical support level. We know that. So if a financial instrument goes up from point A to point B and pull back to 78% Fibonacci retracement level, there is always orders there to buy. There are buyers here. They think that, oh, this company is oversold. It was $100 before, all right. Now it's $22. Wow, the management is still good, they are still gaining more market share, blah, 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 blah. They want to buy and hold because they consider it oversold. So the 78% Fibonacci retracement level after a bullish trend, if the price pull back to 78% Fibonacci retracement level after a bullish trend, is considered as oversold in theory. Now here we are, we see a descending triangle be formed here. What is the best attitude? The best attitude is either to allow the price to break below that support level and to find a resistance before we can even attempt to sell it. Another way that we can avoid okay, the descending triangle trading mistake, because the first thing that is coming to our mind is to sell. So if you are that bearish and you just want to sell, please, next time, just try to look for an opportunity to sell on the upper level of the triangle. So that's why professional will be doing here carefully. So you say, all right, let's see whether it's going to break below it. But in order to control the risk, we will be looking for bearish trading setup on top of that bearish descending triangle. That will be one way to avoid the descending triangle pattern, okay, error. Right, so here it is. So you see here, come here, common centralized kaput, implement a top-down trading method. It's coming down. What I say to traders, anytime you see any triangle, the most important key level for that triangle is what? The median line of that triangle. You see the line that I'm drawing here through the peak of that triangle. It's a very important, okay, line dividing that triangle into two. So you will see soon, as I did that, I extend that line. You see the median line of that triangle. We talked about it before. We can now switch into the mode of market geometry. Alright, so on the same vertical line, repeat, very, very important. If you are doing this on the same vertical line, I measure the distance from the median line to the top. I project it on top of that triangle on the same vertical line. We can now start drawing lines, drawing lines, drawing lines, and drawing lines. Keep doing that on the same vertical line, and so on, and so on, and so on, through the same point. Alright, we can do that, yes or no? Alright, we can do that. But the point I'm making here, we want to avoid the descending triangle mistake. We don't want to assume that definitely is going to be bearish. We want to control the risk in one way. So look for bearish trending setup on the edge upper level of the descending triangle. The second thing that you need to know, you have to ask that essential question: where does that pattern form? Must be formed at a resistance level. Very, very important. And if we want to sell at a support level, we want to allow the price to break below that support level and to find a resistance. What is happening here, though the professional were right to buy on top here, which is a safer place to sell, alright, so the price coming near the median line of that triangle. You see the median line of that triangle that I show you now, which is a very, very important, okay, median line for each triangle. I told trader at the 2-4 stock trader YouTube channel, anytime you see any triangle, draw the median line of that triangle and leave it on your chart. So professionals were selling on the upper level, they were taking profit near the median line. Alright, so they sold it again here, it bounced back to the median line of that triangle, and they sold it again here. It come down near the median line, here they sold it again. Now it pierced through the median line. So in that case, now we are now near that 78% Fibonacci retracement level. So in fact, apart from that median line, there are others also at that support level, the 78% Fibonacci retracement level. So in order to be truly bearish, we will prefer the price to find a resistance below that $23.64 level, which is the 78% Fibonacci retracement level. So those are few things that you can take into consideration anytime you see, okay, a bearish triangle, or especially the descending triangle. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. To summarize this video, the first thing that is coming to traders' mind when they see a descending triangle is the bearish continuation. It is normal, it is okay, but in order to sell, one must wait for the price, okay, to find a resistance below or a key level. So if we see a descending triangle at a support level, at the key support level, the best place to sell is to sell below that key level, i.e. price break below, retest, and then we implement a top-down trading method. We can also control the risk and avoid the descending triangle trading errors by trying to look for bearish trading setup on the edge of okay, the descending triangle. If the price start going down, we should be prepared to take some profit or secure our gain as the price approaching the median line of that descending triangle. As always, if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that job you have not done a good job today, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the nyxiMg 24 traders talking about how to avoid the descending triangle pattern trading errors like Apple.